argue right now. Professor Jeremy Siegel of the Wharton School, he joins us right now. Professor, it's good to see you again. What are your thoughts as we watch these lows of June at least be taken out from the Dow standpoint, and maybe in the days ahead we find the other major averages in this same precarious place?
Yeah, certainly. You know, Scott, I find it very amusing. A year ago at that September meeting, when we had booming commodity prices, when housing prices rising at the fastest rate in post-war history, when we had all commodities going up at rapid rates, Fed Chairman Powell and the Fed said, we don't see any inflation. We see no need to raise interest rates in 2022. Now, when all those very same commodities and asset prices are going down, he sees, stubborn inflation that requires the Fed to stay tight all the way through 2023. Makes absolutely no sense to me whatsoever. Way too tight. We do not have to get anywhere near that level to stop inflation, because all the inflation is basically stopped. I mean, you had a headline just came across 3 minutes ago. Oil back to January levels. That's before Russia invaded Ukraine. You can see what's happening to commodities. We're going to get the Case-Shiller index next week. It's going to show no increase or a decrease for the first time in years. And that's a lagged indicator. On the ground, commodity, all the prices are going down. The only thing that's not going down is wages. And by the way, wages are in catch-up mode. Don't argue they're pushing inflation. They're lagging inflation. I mean, the workers are trying to get a little bit back of what the inflation happens to be. I think the Fed is just way too tight. They're making exactly the same mistake on the other side that they made a year ago.
There are those who agree with you, who think that the Fed is oversteering.
Yeah.
But